All right, everybody, welcome. It is Monday, July 26, 2021. Glad to have you here, Tom's Trading Room, and we are sitting in on a Monday where forget about whatever you're hearing on the news, and we've got a lot to discuss. This week is all about FANG minus Netflix. And so we're going to take a look at FANG. I got a couple other things I want to talk about as well. For those of you that are brand new to the channel, I want to welcome you. Here's what we do here. Well, let me first tell you what we don't do. All right, I'm not going to sit here and waste all of our time by looking at stocks, watching them go up and down, putting on charts that are so small you can't see them anyway. And, but what I will do is I will teach you how I trade, how our group trades as rules-based traders. So what we look to do is spot patterns. We look for patterns in the market. Some of them are easy to see. Some of them you can't see. We'll talk about how we spot pattern both ways. We'll talk about how we use alternative strategies in the market other than stocks to put ourselves in a long position or a short position. And of course, what wouldn't be complete without execution and management and of course, planning your trade from start to finish. So that's what we do here, right? We don't trade on hope. We don't trade on fear. We don't trade on greed. You look at the market right now, the market is down. My open positions, well, as of a few minutes ago when I was looking at them, are up. A lot of that has to do with options and the style of trading that I am looking at. I'm going into this week and I'm seeing news. And the news that I'm seeing across second quarter earnings are that they are just blowout numbers, big beats, but all of that, I think, is spurring the markets just continue to make record highs. So this could be, we won't know for sure, but this could be that sell the news week that we've been waiting for as we head into the final week of July. So glad to have everybody here. Hey, if you're here on a regular basis or you're brand new, I want to welcome you once again. Here's a big thing that is going to help us out, guys. Hitting that like button below in the description. That helps the channel out. Also, if you're brand new, subscribing. We get to do about 2 or 3 videos a week. This week, I will be doing a consolidated video on how I am tackling the FANG stocks this week during earnings. So we're gonna cover that. I'll cover that in a short video, but today it's all about assessing the market, looking for those opportunities as they present themselves, and then planning, executing, and managing those opportunities. Real quick, just a quick 15-second plug. This disclaimer, you can read it in its entirety. I want to mention 2 quick things. Number 1, stock options and crypto trading. They all have large potential rewards, but they also have large potential risk. And number 2, I'm not your investment advisor. I'm here just to show you how it is that I look at, assess, and trade the markets. All right. Here's what's going on today. I broke everything down into basically 3 parts. This is it. Markets are continuing to make new highs. We opened this morning down a bit, but the markets have been trending higher. And I believe a lot of that has to do with all of these lofty expectations that people are looking at coming into the middle of the week. The big days the market's going to be moving are Thursday and Friday, because that's going to be after Wednesday afternoon earnings and Thursday afternoon earnings. All right, we'll take a look at who's reporting and when. But really, I think the market just gyrates higher into Wednesday afternoon. So I believe there's some bullish plays that could be looked at, and in FANG stocks, but maybe not the way that you're thinking about that. Okay. Number 2, did everybody see what crypto did this weekend? First of all, you got to back up to what was it, Thursday, when we hit new lows. I had a live cast Thursday that had something to do with how I lost $1 million in the markets over summer. Well, it was in crypto, where I showed one of my accounts that had dropped from highs of trading at around 2.3 down to below 1.3. I think we were at 1.1. So I had a $1.2 million correction in one of my crypto accounts that I showed live on the cast. And I showed that for a couple of reasons. Number one, I want to let you know that I got skin in this game, and that's just one of my accounts. But I got skin in the cryptocurrency game. And number two, the other reason I showed it is because I was talking about crypto, and I was looking at this account. Interestingly enough, I was talking about it as a storage of wealth, as a way of storing assets that I am investing in, not trading. This is not a trading account. This is buy and hold. This was mine and hold, okay? Mining and holding, and I've been, this account's been, it's been open since 2014, but I started mining in 2013 and moved some of my mining coins into that account. But I wanted to share with you that I do have skin in this game. So letting you know that I'm not just analyzing this, the stuff that I show you guys, I'm not sitting here going to tell you what to do and then have this big disclaimer up that says, I don't own it. My family doesn't own it. My friends don't own it. I don't have cousins that own it. I don't have cousins, girlfriends, or boyfriends that own it. No. What I talk about is things that I truly have skin in the game. And so I put that out there to let you know that win, lose, or draw, I know what it's like to make a lot of money. I know what it's like to lose a lot of money. So let's go ahead and move on. And we're going to talk about that crypto rebound. We're going to talk about FANG on tap. FANG on tap is what I'm talking about when I say FANG. It's really FAAG because the N reported earnings recently. So we got Facebook, Apple, Amazon, Google. Those are the big ones that I want to look at. And I want to see if there are some diamonds in the rough in terms of creating opportunity from those four stocks. So that's the plan for today, for those of you that are joining me. Feel free to comment, guys. If you have comments on anything that I'm talking about, feel free to put them in the comment box. I'll go through the comment box over the hour. And if there's anything you want me to look at, I will try to do as much as I can here during this hour. I like to really think that my live streams are about my live viewers. And so if there's something you want to see, I'm happy to put it up on the screen. And of course, there are comments that I'm going to be highlighting throughout the session. So if there's something that comes up that I think everybody needs to know about, then I am excited to share that with you. A couple other quick things that I want to mention too is that number one, I do have super chat donations. All right, super chat donations, you can donate to the channel. I'll let you know this, all of our donations, all of the revenue that comes in to our channel is donated to charity. I'm actually looking at some charities that we're going to be donating to later this week, and I will share those with you after we make those donations. So we're excited about that. So again, any super chat donations, we are glad to accept them, and we are glad to push them into the hands of people in need. The second thing I want to mention is that what we're going to also be showing is I'm going to be showing some charts off of our tools, tomsoptiontools.com. If you're brand new and you want a 2-week free trial, then go below in the links and you'll see a link to a 2-week free trial, and you can pick any product, any level that we have, and you'll get the first 2 weeks on us. And there's no obligation. You can cancel at any time. Cancel before the 2-week trial is up, and there is no cost to you. We do have some great costs out there for our YouTube subscribers that want to learn how to trade options, contrarian style, which we do also, and I do a lot of seasonality. It was something called the money calendar. But that's all out there available to you, no obligation whatsoever. All right, let me put the comment section on real quick. Let's see what we got going on. Celia, good morning. Glad to see you there. Also, hello, Eric. Glad to see you as well. Jonathan, good morning to you. Boy, I see my support guys in there too. Awesome. It's great to have some help there in the back of the room. Napoleon, glad to see you in there as well. Lucien, good to see you. Mr. K, hello. Taryn, Giovanna. Oh, Gianna, excuse me, Gianna. Giovanna's my mother-in-law's name. It just spits out. All right. Kathy, thank you very much. Yep, crypto is finally waking up. And when I talk about crypto, we said last week that we thought that there was a a decent probability that the lows could have been in for the year in those high 20s. That just got a lot better. I'm going to show you why here in the program. So good morning from Pensacola. Paul, good morning to you. Dave's in here, not just a pretty face. Let me tell you, I got a quick story I'm going to share with you. So back in, was it the early 2000s? I'm at a conference, one of those trading conferences. You know, when we used to do live ones, guys, way back in the day. And somebody came up to me. The guy's name was Neil, and he was from a radio station, 97 FM talk radio out in Los Angeles. And he said, you know what? Your voice would be great for radio. And I took that the way any Italian would. So what are you saying? You saying I'm ugly? And we had a good laugh about it. But that was the beginning of my talk radio, which I did at the Howard Stern building out in Los Angeles before we went coming out of terrestrial and going into cloud-based, which we still do podcasts and live casts, very similar to the way we did those back then. So, Dave, thank you for bringing up that thought there. Lauren, good to see you once again. Glad to see you in here. It must be a Monday. It is a Monday. And again, guys, glad to see all of you popping in and saying hello. And thank you. Thank you very much. You know, this program here, I don't have as part of YouTube, I don't have any paid channel on YouTube. This is really just to give you an idea what it is I do. And if you're interested, you can hang out here. We have videos that happen every single week. I do have premium stuff available as well. You can get into the description and the links and you can see all of that. All right, so let's get rolling here. So I want to move over into, let's start right here. Let's just start right here. Let's bring the chart up, get my face down. So what we're looking at here, guys, is this is the SPY. All right, for those of you just joining me. This section right here, I'm going to widen this out a little bit for you. So what you see right here is the S&P 500 ETF. Now, this over here on the far left is 9:30, the start time. I have a red line down here. I have a green line right here. And what I've done is I've just simply gone in and added this code. And what it just tells me real quick, it's just visual. It just tells me where we are after the first hour of the day. If the screen is green, we are above the first hour's high. If the screen is red, we're below the first hour low. And if the screen is black, we're still in the middle of the opening hour. As you can see, we bounced off at 10:45. We hit a low. We hit that. We went above the high of 9:35, and we've been above it since. Now we hit a high of 440.83. We're coming back down just a tad. If we go below 440.24, you'll see the screen turn black. And it just tells me we're back inside the first hour window. Now, the reason I look at this is it gives me an idea of trend. So that first hour high does sometimes give me an area of support. And if we trend up, it's very seldom that if we have a green day, that becomes a red day. All right, we typically will get pullback, but we typically don't get pullback that takes us down below the red line. Sometimes that'll happen. For instance, if we get a Fed decision that doesn't go the way the market expected it, if we get some breaking news, global news, then that'll hit the SPY, and that could flip it from red to green. It could go from a bullish trend day to a bearish trend day. So I put this on the screen because we're going to be looking at this with several stocks. SPY hitting record highs. You know, if I move over to the daily chart, you can see here, and I'm missing one big piece of equipment. Let me grab it off the launch pad right now because it's important that I have the big red mouse on. There we go. Big red mouse is on and everybody can see it. This is a 40-day chart of the S&P 500. Even if I made this a 30-day and we got just around a month, then you'll see here, lows happened back at the middle of June at around the 415 level. We're hitting highs right now. Now, if we go back and we see the high that happened right here at 438. So if we went back 1, 2, 3, 4, 5, 6, 7, 8, 9 days, let's take ourselves back to, let's call it the 13th of July. I want to show you how back testing can help us. 13. Take a look at July 13th. Now, there's your low, there's your high. Now, we see pullbacks at 428, 426, and 423. Think about 428 and 426 because I want to take us forward. And I want to show you what indeed ended up happening. There's 426. There's your 426 pullback. That was the 50% pullback from this high that occurred from the low to high. And so we saw that happen, and then boom, off to the races again, brand new highs. All right. Now, the aggressive trader would have been buying right in here. The more conservative trader would have waited until we busted out above that 38% and then bought that next day because then they've got themselves a little bit of a buffer. Down here, you're catching falling knives. All right. A day later, you've got a little more room to breathe with. So it all depends on you as a trader if you're looking at this short term. Right, over the last week, the SPY has just had an incredible run. So that's S&P, all right? Brand new highs, no reason to look at Fibonacci on SPY. Now, let's move to TLT. There's a reason I want to look at TLT. And the reason is that TLT, a couple things are happening. First of all, notice the black background. That's because we hit a low in the first hour, we hit a high in the first hour, and we have not, well, we exceeded that high for a small amount of time, but we're sitting inside the low and the high right now on this chart. We're at 148.71. Now, you might look at this and say, this does nothing for me, Tom, other than the fact that I see with the channel that bonds are in today. So let's expand on this and look at a longer term chart. So to look at the longer term chart, we'll look at the 30-day and see if that tells us anything. And the 30-day really shows us that we had a low back at the middle of June, just like the stock market. That was at 141 for TLT. We had a high that took us above 152. Look at the pullback that happened. The pullback occurred just 4 days ago. We came inside the 38% retracement, came close to the 50% retracement. We're rallying back up. We're coming off that. There's a bearish day happening today. But here's the thing. So bonds, two things are happening that make me just a little bit nervous and tell me that this could be a sell the news week. Bond market's moving higher. Now, why are bonds moving higher? Is it possible that the bond market's moving higher because it was overdone a month ago? Is it possible that maybe interest rates are cooling off because the Fed's saying we're just thinking about raising rates, we're not actually doing it? Or is there something else the bond market's telling us that perhaps traders are getting out of stocks quietly and getting into bonds, awaiting a potential sell-off? It's all possible. Okay, so what I see here is I see the bond market trending up with the stock market. One of them's got to give. Something's got to give. Either bonds got to cool off or the stock market's got to cool off. They both can't continue to go up together in a straight line forever. Just can't. It just doesn't happen. It's not economics 101. So that's the bond market. Now, let's move on to oil. I want to move on to oil. I want to look at oil. I want to look at gold. And then I want to look at your comments. If you have questions, if you have stocks you want to look at outside of FANG, because we're going there. And I will be going to cryptocurrencies next too. But if you have comments or questions, feel free to put them in right now. We're going to take a look at them in probably about 2 or 3 minutes. So let's take a look at USO. Because USO should be cooling off, right? The weather's going to be cooling off eventually, but that's not the case because look what happened. USO cooled off to the tune of about 15% like that, all right? We saw it go from 51.15 down to 45. I mean, that's a 6-point drop inside of 5 days. 6-point drop on a $51 security does put that in around the 12%, 11.5%, 12% drop. Since then, we have rebounded. Now we're running into a little bit of an area where this is where I think it should be, in the high 40s, and should slide down, right? Maybe, and I mentioned this last week too, oil might stay high until after Labor Day. And the reason why is because we've kind of extended that summer demand. And so that's a possibility as well. right? But we do see oil the last couple of days. We hit 49.5, hit 49.5, hit 49.5 again today. And so it's consolidating for some kind of a move. We have yet to see that. Let's take a look at GLD. GLD, I'm a little disappointed in this one. And that's because it almost doesn't make sense. And I can't be the only one thinking about this, because as the US dollar has just gotten, we're just continuing to flush more dollars out there. You would think that gold and hard assets like gold would be reacting more, but they're not. And I believe what's happened is a lot of money has been taken out of gold and put into digital assets. I don't think a lot of money has been taken out of the stock market and put into digital assets or gold. And so it could be that gold is just not having the kind of moves that it once had. Look at the volume. The volume on gold on GLD has dropped down. I mean, yeah, we had that big 26 million share day, but we're down to 4 million shares now. So, I mean, gold's kind of lost a lot of its luster, but I like being in the quiet trade. I like to go places where people are not. So that's why I continue to invest, not trade. I continue to invest in GLD because arbitrarily I look at this. This should be a $2,000, maybe a $2,500 an ounce asset. What does that translate into here for GLD? 200. This should be at 200, maybe 250. We'll see. Time will tell. So that's GLD. So let's move over and let's look at what we got going on for today for USO. Today's USO, a little bit leaning toward the bottom, right? Maybe it is rolling over sooner than we thought. GLD, right in the middle as well. As you can see, it's opening hour high, 168.86. It's opening hour low, 168.11, and we're sitting right there smack dab in the middle. All right, so let's go ahead and take a look at a couple quick questions right now. Michael Coons, good to see you, buddy. And Mike's a good friend of mine. He has, I've known him for several years, and it must be, how late is it right now in Malaysia? I mean, I look at New Zealand. I got property there. But Malaysia, isn't that about 12-hour difference right now? Anyway, Mike's asking about the big divergence between the U.S. markets and the emerging markets. And, Mike, I'm bringing these up on the fly, so I don't have scripted answers ahead of time. But I have to tell you, I have not looked at the divergence. I am going to assume, and I'm going to let you correct me here on text, whether or not I'm right or wrong. But the divergence that I believe you're talking about is the widening between what's happening in the U.S. markets and what's happening in emerging markets, where the U.S. markets have just gone to the races. And if that is true, and I'll go ahead and answer you right now, because again, I haven't looked at the long-term charts of emerging, but if that is true, really what's happening here is there are a lot of people getting into stocks over here in the U.S. and overbuying simply because it's a U.S. dollar play. Where else are you going to put your money? We've been talking about this narrative for months now. Where else are you going to put your money? When someone says to me, we're going to get a crash in April, because that's when they were, big crash coming in April. Where are you going to put your money? Big crash, sell in May and go away. Where are you going to put your money? June, July. I do believe we need to have one of those turn the retail trader upside down and shake them from their boots moments. And maybe that's a 10% pullback that would happen in a matter of weeks. I think that has to happen to get grips with reality. But I still keep coming back to the same thing. Where are you going to put those US dollars? Because they're being put to work somewhere in the private markets, in real estate, in public equities like we're seeing right now. But, it's becoming more and more apparent here. Even though I have cash sitting on the sidelines, I've had a good bit of cash sitting on the sidelines now for months now, waiting for pullbacks, waiting for these on sale moments, and it's not happening. Now at the same time, I'm going to mention this too, and that is that we have we have a situation where things are going up at incredible rates. So part of me is saying, sell some real estate, sell some stocks, take some profits. And then the other half of me is saying, why? Got to pay taxes on those profits. And then what are you going to do with the dollars you have left over? Are we going to sit and wait for the next opportunity, which might come tomorrow and might come in a year or two from now? So those are the questions that I grapple with, and I imagine a lot of investors are grappling with as well. Great questions. Your indicator, I see, container ship traffic in front of your condo. That's a great indicator, by the way. Pre-COVID, 25 ships a day, now 1 to 2. That's surprising as well. Would that have anything to do with the trade relations between the U.S. and China? That's a question I'm asking you and maybe the others as well. But great questions, great comments, and good to hear from you too. What do I think about crypto funds like GBTC and MSTR as long-term holds? Georgie, that's a fantastic question. If you were asking me that back in March, and I haven't looked at this yet, but if you asked me that back in March, I would have said at the time, GBTC was trading at about a 10 to 15% discount to Bitcoin. I don't know where that is right now. I'm going to check with my, I need to do a little bit of research, which will take me longer than I can look at right now. But we need to find out what the fundamental values are, looking at it versus Bitcoin and Ethereum, and then get an idea of whether they're over or underbought, oversold or underbought compared to the asset. The only thing I could do right now is let's take a look at GBTC on the charts. GBTC. And we can look at where it's at today. Okay, big. I mean, I guess it was oversold, because going from 27 to 32, and you're seeing a near 20% rise. All right. So what did we see happen with BTC? So BTC, and the way to look at this from Friday to Monday is you've got to look at the futures markets. You cannot look at Bitcoin on Coinbase unless you add up what happened between Friday at 4 o'clock and where we are today. Then it makes sense. But the best way to do it is to look at Bitcoin itself. Here you go. Bitcoin futures. So Bitcoin futures open on Sundays. As you can see here, they open Sundays. I'm just going to try to widen this out as best I can. Let's do a 15-minute bar. That way everybody can see this a little bit clearer. There you go. So where I'm pointing, this is 6 p.m. Sunday evening, opening around 34.5 and quickly ran up. Now, we were looking at this in the afternoon, and it looked like a lot of people that were short. You might think, how do you short Bitcoin? You can't short Bitcoin, Tom. You can only purchase it. No, you can sell it. You can sell contracts, futures contracts in Bitcoin. And a lot of folks look like, if you back up a little bit, we're looking at this Friday afternoon graph where you saw 32.9 become 32, become 32.6, become 32 even. And they saw these lower highs and lower lows. And a lot of folks got short at the end of the day. Well, guess what happened? They could not get out of these until, and they saw what Bitcoin was doing. Everyone saw Bitcoin on the weekend. And a lot of folks that were short this were probably having breathing problems, because all of a sudden something they sold for $32,000 is trading $34,600, $34,800, $35,000. It's already against them by $3,000 per coin. Let me tell you something else about this. For those of you that don't know, this is a leveraged instrument. Selling one of these contracts is like selling 5 full Bitcoins. So you're talking about $150,000 roughly, $160,000, investment down here at the 32 level. So you take a look, and all of a sudden this goes up 33, 34, 35, 3,000 against you. You're not down 3,000. You're down 15,000, because you got to multiply that 3 times 5 coins. Where are they down now if they're hanging on? Well, now we're at 39,000. So you're talking about something that went from 32 to 39, that's 7,000 times 5. That's down. Someone is still hanging on to that, and I don't imagine they are. I imagine, based on the chart that we saw that happened last night, somewhere between 9 p.m. and 10 p.m., between 8:45 and 9 p.m., you saw a lot of buyers coming in, and I am willing to bet a good bit of those buyers were people buying to close, buying back their shorts and taking that loss. That loss, which was $7,000, $35,000 per contract loss. That's what's pushed the market up, the futures markets up during that time frame. Then we leveled off. You know what's happening now? What's happening now is we're making another run up above 39,395. This is all bullish fueled. Okay, there'll be some bears in here that saw this last night and said, I'm going to sell this on looking for it to come back down, and it didn't happen. 37,925 seems to be holding, and now we're 39.2. So this is all stemming from the B word conference that happened last week, late last week. And that has spilled over some new buyers. Now, I want to talk about Bitcoin a little bit more. All right. So, and Paul, you've got a good comment here too. I thought the big surge Bitcoin was Amazon's job posting digital currency and blockchain strategy. That's part of it. You got a lot of things happening here, but what's happened is that, if you take a look, until futures contracts were created, there was no way to really short Bitcoin. Now you've got shorts that have been pushing Bitcoin down that are now buying back. Some are buying back at profits. Some are buying back at losses, but they're all buying back and creating a bit of this technical swing to the upside. So at this point, let's go ahead and take a look at Bitcoin. I'm going to move over, and then we're going to come back and look at FANG. But if you take a look at Bitcoin, let me bring up a chart, and I'm going to go to Coinbase coins because that's the coins that I trade. And you can see here, nearly every cryptocurrency has had some form of movement to the upside, but I want to look at BTC because that's the important one. That's the big one. Here's BTC. So we can look at this a couple of different ways. You can see the downtrend, and that downtrend was broken 4 or 5 days ago. That was broken before just after the B word conference. And then we started moving slowly higher. Now what's happening here? We're about to get a change in direction on the 10 and the 30-day moving average. So that's a technical buying indicator as well. Let's see what else I see going on. Is there any other chart type that makes me want to look at purchasing Bitcoin? Well, we had a darknet signal. This is a channel buy and a channel sell. It made a little bit of money. That's a trading signal, not an investing signal, where this 10-30 moving average crossing over with all of this buying opportunity we see going up. That's a longer term trend buy. But the most important thing that I see that potentially has changed the trend for the year, and hey, I could be proven wrong on this. There's no guarantees on it. But typically, if you're a technical trader, and I'm throwing this out there to those of you that already know this, and those of you that don't, when you look at the stock market, you look at the overall stock market, when we get a correction that is greater than, and a lot of folks say if it's greater than 10%, then we move into what's called correction territory. If it's greater than 20%, we move into what's called bear market territory if we drop below 20%. Same thing if we're going down. If you're going down and you jump up by 10%, that could be an upside correction to a downtrend. But if you go more than 20%, that's considered a change in direction. Now, take a look at, this is CoinMarketCap, coinmarketcap.com. I want to update this, so let me just update it to right now, so we're all looking at this. Here's Bitcoin on CoinMarketCap. Right now, 39,267. It's up nearly 15% in the last 24 hours. Some could say just what's occurred in the last 24 hours has constituted a change in a potential correction to the downtrend. But look at the last 7 days. 27% move off the bottom. And that bottom was in the last 7 days. So that tells me, if I'm a technical trader, that we, in the last 24 hours, had a change in the trend. Okay? Same with Ethereum. Ethereum, in the last 24 hours, had a change in the correction. It had a correctional change. But when you look at the last 7 days, Ethereum had a change in the trend direction. Very exciting stuff, especially since last week. And I was talking about how much money I'd lost in that account. I gained a good bit of it back. All right. A good bit of it back. How much? We'll take a look at it on later this week. But these are the things that excite me right now, is the fact that we're seeing a potential change in the actual trend. So good to see. All right, so now and this is all the way up here in the 60s again. This is the high that we saw all the way down, and it's amazing. We down here at the bottom, right before the B word conference, that could have been that shaking, that scenario I talked about, which is, where is the pain going to be? Who's going to suffer the pain and say, enough, I want out? It happened, what was it, a month or so ago, when we dropped down really hard and rebound, and they tested that low again. But the thing is when you see the drop in the rebound, that only lasted for 2 days before we started seeing more red candles happen. All right. Since last week's beatdown, we've had 1, 2, 3, 4, 5, 6 up days in a row. We haven't seen 6 up days in a row. If you want to go back and count them, you haven't seen 6 candle days in a row since before the all-time highs. This is good stuff, guys. All right, that's BTC. Let's take a look at ETH. And I'm going to update ETH right now. ETH, same exact thing. If you want to see the up days, the last time we had 6 days in a row, 1, 2, 3, 4, 5, 6 up days, you had to go back to May, when we were coming out of where we are right now. We were coming out of that 2400 area and made that big run up to the low 4,000s before dropping right back down and then creating that series of lower highs and lower lows. So this is exciting. This is exciting that we're seeing what's called a continuation of buying. We're seeing some resistance right now on Ethereum, but today is a very, very strong day that we see. All right. So MM says, so BTC won't crash to 20? I'm not saying it won't. What I'm saying is that maybe it might happen later on in the year. All right. How many of you out here, and there's several of you on the live stream, but how many of you out here right now, type it into me. Give me hit me up here on the channel in the comment section. Tell me if you are an Elliott Wave trader right now. If you're an Elliott Wave trader with cryptocurrency, now's your time to speak, because I'm going to tell you what I see with Elliott Wave that leads me to believe that we may see higher highs before we see lower lows. So tell me if you're an Elliott Wave trader. Love to hear from you right now. All right. Kathy, I'm with you there. We may be heading that 41, 42K of support / resistance. Let me explain a little bit about what Kathy's seeing. So if we go back to BTC, and there's BTC right there. Let's bring it up on the chart. And let's do the crypto Fibonacci. Let's do the crypto. I have to say it more than once. The crypto Fibonacci. There you are. There's your 41,000 retracement level. If you want to look at what's happened just in the last 100 days, if you go back 100 and let's call it 120 days. See if 120 days are what I'm looking for that all-time high. There you are. Okay. So Kathy, take a look at the bottom, 29,795. There it is. I'm circling it right now. The liftoff we've had in Bitcoin. There's the first area. That's the Fibonacci area of resistance. And that Fibonacci area of resistance is very close to what you're talking about. And you're talking about the higher high, the higher high than we are right now, that is sitting in between that 41, 42 area. 38% retracement, would take us to 42,693. 50% retracement, 46,677. 61 takes us just over 50K in Bitcoin. Again, we'll see where they're going, but there's a lot of big money that got involved in Bitcoin in the last week on the drop down. I have to say I was not one of those big money guys. I had buying opportunities lower than we are right now. Obviously, those did not hit. They're still out there, but I don't see them hitting anytime soon. I just see the only thing hitting are more than likely resistance numbers that I'm circling right now. All right, so let's go ahead and move forward. Fibs are much easier to understand in Elliott Wave, that's for sure. VW bus. VW66 bus. Do you have a VW66 bus? Is it the one with all the windows around it? How many windows were on that what was the number of windows on that bus? I loved that bus. That was a great looking bus they made, and they're not cheap anymore either. I've seen how much those things cost. So action to take. Tell us the action to take, please. Well, if you own Bitcoin, you sit tight. You know, I sit tight and I see where things are going. Of the two, though, you know, if I were to look at coins that I really like, BTC made the big takeoff. If we take a look at ETH, has it made a move that is similar in terms of its liftoff? Yes, it has. It looks like ETH. I've got 2,700, 2,982, and 3,264 as the next areas of resistance. Is there a coin that I like that has not left the station yet? Well, potentially there is one. I'm going to share it with you right now. I like this one, Yearn Finance. It really tells a great tale. It was 90. It hit 95,000 up here, dropped all the way down to 25, and is now making the move back up again. But as you can see, we're talking about something that's still trading in the low 30s. Now, keep in mind, it's now lower than Bitcoin. But earlier this year, it was much higher than Bitcoin. It was 50% higher than Bitcoin. Right now, it's lower. I think this is the one that we want to call the caboose that is leaving the station a little bit late. That's the coin that I like when I look at all of them. Also, it has a much lower number in circulation. I like that too. This one's a more volatile coin, but you can trade it down into fractions. You don't have to. You know when you look at these coins and you're brand new, you know the thing that I hear from a lot of folks is I don't have $32,000 to spend on a coin. You don't need $32,000 to spend on a coin. These can fractionalize down to a Satoshi, 8 decimal places to the right. All right. So you can fractionalize these down to small investments or small trades. What I'm saying is that when I look at this one fundamentally, and we've talked about this in some of our premium services where we've hit certain buy levels. We also sold this back in the $80,000 range. So we've bought it low. We've sold it high. We've bought it again. But this is a good-looking, longer-term coin. I like this one. Full disclosure, I have this in my portfolio, and I look at this more of as an investment coin right now because I believe it's so cheap relative to what's going on in the crypto environment. So, yeah, I like Maker too. QMS, like Maker. That one showed up on one of my bullish opportunities as well. Darknet signal on YFI. Let's go take a look and see if we got one on there. For those of you that are not familiar with Darknet, this is a channel signal. And looky there. Any of you that follow our channel stuff, let me give you the plug, the shameless plug, because I got to do it now. Thank you, Kathy. That tomsoptiontools.com free trial includes these Darknet signals. And if you take a look here, we had a Darknet channel buy that happened on YFI back down here in the 20s, 26, 27,000. And it's moving now to the upside. So we like that signal. So, yep. So you got a Darknet signal. We've got Fibonacci ideas of where these are likely to go. So there you go, guys. All right. So how about we turn our attention to FANG on tap. Let's take a look at FANG on tap. And before I do, I see a lot more folks in here. For those of you that joined late, welcome. Welcome to our to the live stream. I do this every Monday at noon. I want to mention a couple quick things to you. Again, as I mentioned early in the broadcast, hey guys, we all know that stocks, options, cryptocurrency, all these type of assets, they have great rewards, but also have great risk. And I want to also mention that I'm not an investment advisor. I'm not your money manager. I'm here to show you how it is that I trade and how I attempt to make money in these markets. I had a disclaimer at the very front of this. You can rewind back, or you can take a look at this live cast when it's recorded to read it in its entirety. Second thing I want to let you know is that if you're new, welcome to the program. I do a couple videos a week. We do some lives. I do lives on Mondays and Thursdays now, and I throw a video in there in the middle of the week. And the video I'm going to be talking about this week is trading earnings and trading through earnings, scalping the earnings market. So I'm going to talk about scalping the earnings market with FANG stocks today. So let's talk about scalping. And what is a scalp? Well, a scalp involves me already holding tickets. And, again, I talked last week about buying option premium and then selling it right before earnings. This week, I want to talk about selling option premium past earnings or through earnings and buying it back. All right. So this is something that you can do if you're bullish on a stock, if you're bearish on a stock, or if you don't even know which way it's going to go. So we're going to start with, let me go ahead and start with Facebook. So I'm going to bring Facebook up, and Facebook, FB. Actually, you know what? I have it in my stock list. Let's bring it up in the stock list. Here's Facebook right now. Last 30 days, we've got a low at 330. We're hitting highs right now. You know what's going on? Financial news, emails, social media. All of these are pushing these stocks ever so slightly higher. They're moving up. Let me just make sure that I'm working with the best data that I have. Here's Facebook. We really came off a bottom below 340, and now we're trading at 375, heading into earnings, which is going to happen in 2 days. Earnings are estimated to happen after the market closes on Wednesday, the 28th. So we look at that Wednesday, 28th. This is what I'm seeing. I'm seeing this market with, unless something outside of natural forces happen, Facebook should continue to really kind of gyrate higher into Wednesday afternoon. After that, all bets are off where it's likely to go. Here's a quick question. I have comments for you, for all of you. Take a look. Here's my question to all of you. Where do you see Facebook going after Wednesday afternoon? How many of you say it's going up? How many of you say it's going down? Good time to come on in, chime on in. There's 369 of you right now. And so those of you that are, out there hanging out with me, be part of the comments. Where do you see Facebook, higher or lower after earnings? Because based on your decision, I'm going to show you what it is that I'm looking at. Now, there's something else that we're going to look at on Facebook right now, and I want to get rid of a few things while I'm waiting for those comments to come in. Let's get rid of Fibonacci. Let's clean up this chart a little bit. Let's go out 60 days, and we're going to work with 60 days for the rest of the afternoon, the rest of the hour. So you see what I got going on here in red? This is implied volatility. This is options premium. Options premium kind of hit a bumpy high over here back in May when we were trading the red side. This is the at the money IV, trading up here around the 38 level. We dropped down, and as Facebook was just slowly meandering, we dropped down, and our option premium was as low as 22. That was about a month ago. In the last month, since Facebook initially made that jump up, and this was on June 28th, when I was gone, I was in Oregon, sweating. Actually, I wasn't sweating. It was so hot and dry out there, my body wasn't sweating. Anything that was coming out of my body was disappearing. But we saw Facebook make a big jump and then started moving sideways. But look what happened to the IV. Option buyers came in, call buyers, put buyers came in, and have been buying these options up and bidding up the offers. And we went from an area in the 20s. Now we're up in the 40s. In the last month, options premium, that's the premium that you pay for, that time value, not the real value. The time value on these options has basically doubled with the same time to expiration. So if you look at the money options back in June and you were looking at, say, weeklies, and you're looking at weeklies now in July with at the money, you're paying twice as much in time premium based on this graph right here. That is because earnings are coming up in 2 days. And with all the hype that's happening around earnings, that's just pushing these option premiums higher still. Now, last week, had you bought Facebook options, you would have, if you bought calls on Facebook, you would have enjoyed the fact that they've gone up in value, not only because the price of Facebook's gone up, but also because all the hype coming into earnings has pushed the option prices even more. But those are gone right now. We got to start thinking about, unless you want to trade the stock for a couple of days or buy the calls and try to flip them in a day or two, we got to start thinking about a strategy that goes through earnings. The strategy through earnings that I see is I am looking for, I don't know whether the stock's going up or down, but what is the option premium going to do? The option premium in most cases drops very, very quickly, right? So that's Facebook. So when I'm looking here and I see what your comments were, I see a lot of down, down, down. I see some ups, but I see mostly downs on the screen. All right. I see mostly downs on the screen, guys. A few hires, but down and fill the gap. All right. So what Anthony's talking about is he's talking about a gap that we may not even see it. Anthony, you could be talking about the pop that's going to occur after earnings and a pullback, or you could be referring to maybe the gap that started last week. But I imagine what you're talking about is that Facebook's going to come out with earnings. You're going to see it jumping after hours, and you're going to see it open the next day. And you're talking about filling, which means backfilling back down on the move. All right. And there's another comment about Wall Street Alerts recommends Facebook up to this week. And what I'm looking at is, I don't know what Wall Street Alerts looks at, but what I look at are patterns. I look at price patterns and I look at time patterns. And we're going to take a look at both of those. I'm going to look at those for all four stocks. So let's just go through and let's look at the rest of the stocks a little quicker. Here is Apple. Same thing. Apple's gone from 124 back in June. Now we're hitting those all-time highs again. Right now, if we were to close right now, we've been at a new all-time high, closing high for Apple. But Apple's trading up there to that 149.5 area. Look at the options. Options were at an 18 back on the 28th of June. They're now trading at 35, 18 and 18, 36, almost a double in time premium, what you're going to pay for options on Apple. Amazon, one of my favorite trades is Amazon. And the reason I like Amazon so much is because it's expensive and I like selling premium. And so Amazon's gone from a near 20 on the option volatility. It's above 38 right now too, as the stock's approaching its all-time highs that it had back at the beginning of June. But you can see the option traders are going in. They're buying. They're buying calls. They're buying puts. The call buyers think the stock's going higher. The put buyers think the stock's going lower. And you got some straddle buyers out there too. Straddle buyers buying a call and a put at the same time. And they don't care where it goes. They just hope it goes somewhere. All those types of traders are adding to offers, the asks going higher. And that's what you're seeing in this red line. This red line reflects those asks, right? So that's what's going on with Amazon. Take a look at Google. So Google itself has had lower volatility down here at, again, the end of June, the 27th. We saw it at 17. It's at 36. It's more than double its time premium right now, hitting brand new all-time highs at around 26.69. So this is an area too that is, Alphabet is seeing a big increase in its stock, but it's also seeing a big increase in option premium. So for those of you that are looking at this, all right, and, to finish Facebook, how do you play the Facebook earnings day this week? I didn't answer. I didn't answer because I wanted to get all these other, because they all mean kind of the same thing. If you believe, and most of you do believe, this is a buy the rumor, sell the news type of scenario. If you believe that all of these are getting overdone and it doesn't matter how good the earnings are going to be, there's going to be a sell-off after this. If you are of that belief, then what you're looking at doing is something in the call spread arena. So let me explain what I'm talking about here. I'm going to bring up a new chart. I'm going to slide this over, and I want to bring up some option chains because I want to show those of you how we create a trade like this. And I'm going to use Facebook, but you can do it on anything. All right, you can do it on any stock that's reporting earnings. I'm going to show you 3 different types of trades. And some of you might not like these, but again, it's how you interpret risk and reward. Let's start with the option chain of Facebook. So I'm going to type in FB, and what I'm looking for is I'm going back, and I need to look at a couple things. I need to look at earnings and how they affect, how the prices are affected. And so what we're looking at now is I'm actually coming over to an area in our tools that we call earnings effects. So what we're able to do is go back in time and look and see what the earnings did, all right, during these time frames. And so, yes, I looked at the price changes before earnings. If you take a look here, they ranked them. They said, well, Alphabet has Google has the biggest median percent change. But when you look and you see what happened, it was up 2%, up 7%, down 7%, up 2%. So 3 of the last 4 quarters, Google's price has gone up right before their earnings. 4 of the last 4 quarters, Amazon's price has gone up before earnings. Look at Facebook. That's 3 for 4. Look at Apple, 3 for 4. So the one thing we do know is that these FANG stocks typically go up in price up into their earnings report. Okay, the question we need to ask ourselves is, what does it do after earnings? Now, this might not be a great, because we're looking at the past. And remember, we've gone through COVID in the last year. So you remember what stocks were doing after March. They were all going up. So here you go. Facebook had the best after earnings move. Up 8, up 5, down 8, up 9. So they got those pops that happened after earnings. Okay. 3 of the last 4 quarters, Google went up after earnings. It was a split decision for Apple. Up, down, up. Same with Amazon. Up, down, up. So if you're a pattern trader, you could look at this and say, well, Facebook, 3 for 4. Maybe I play Facebook to the upside, and maybe I play Apple or Amazon to the downside. Maybe I play Facebook and Alphabet to the upside, and I do Apple and Amazon to the downside. I create some bullish spreads on Facebook and Google, and I do some bearish spreads on Apple and Amazon. That's actually not a bad idea. Again, I'm not telling you to do this. I'm not your investment advisor. All right, I'm helping you research to come up with better ideas. All of you watching this, you probably got an idea of what it is you want to do anyway. So the question is there a better way? And so now that's where we're going to go and we're going to take a look at Facebook. So what I want to do is I want to look at Facebook, and I'm going to look at FB, and I'm going to bring up the option tables. And the thing I got to do is go back and look at that ranker. All right, what was the biggest move that happened? Okay, well, it was under 10% with Facebook, okay? Doesn't mean it won't move higher than 10%, but it was under 10% for Facebook. That's it. That's good to know, because when I look at this option table, I want to go out 15%. What that means, let me blow this up and let me explain. What I did here, was I am moving. I'm going to look at option strikes that are 15% above and 15% below today's stock price. Now, the other thing that's happening, and I'm using this Friday's expiration date. Remember, the earnings don't come out for a couple of days. So this isn't something I have to do today. I could do this tomorrow. I could do this preferably Wednesday, right before the market closes. And so I'm in at the money before before Facebook makes its proverbial jump. But here's what I'm looking at. So if we look 370, 372 right now. So it's safe to say that if you go down to around the 330 area, all right, 330, that 330 area is just outside of the 10% move. So 330 is 10% below Facebook's price. If I sold a put option right there, -1 of the 330 puts, now I've got to, now I can sell that put, and that's naked. That's a naked put. I would be obligated to take the stock if Amazon comes down. That's one way to do a bullish trade. Just sell those puts. You're only going to collect 60 cents for them, but you're more than 10% out of the money. You're getting paid $60 to put yourself on the hook to buy Facebook at $330, and you're only on that hook till the end of the week. After that, you either A, you get to keep that $60 and move on. B, if it comes down, you still keep the $60, but now you're getting 100 shares of Amazon at 330, and Amazon has to be at or below that in order for that to happen. Those are the two things that could happen to you if you're a put trader. If you want to avoid some risk, you know, the problem is what if what if Facebook drops to 300 or 250 or 200? Not likely to happen, but I remember not too long ago when I saw Facebook announce earnings and the stock dropped 20% the next day. It could happen. That was a couple of years ago. So in order to hedge that, what if we went in and we bought the 325s? Now, if we did that, what's going to end up happening is I'm not going to get a lot of credit. Not going to get a lot here. So watch what happens here. This is what's called a bullish put spread. Now, some of you are going to look at this, you're going to say, why would I even take in $17 and risk 483? That's a good question. Why would I only bring in 3.5%, Tom, in a week? Well, let's see. Because the probabilities might tell us that this might be a good opportunity. What's the statistical probability that Facebook's going to stay above that level? 99.9% chance that by Friday, you're keeping that $17. All right, so there's a 0.1% chance you could lose. And lose what? Lose below that. Okay, so that's what the probabilities tell us. Okay, so there's what we see, and that's where we factor in probability. Now, some of you might be looking at it saying, "Hey, you know what, Tom? I don't like that trade. Show me something that's got a little bit more reward to risk." And that is if I put it on right before Facebook's earnings come out and then they drop afterwards. Can I get something that allows me to make money on the drop, but at the same time, I've got something decent for my trade? I'll show you what that is. So let me clear this out. Let's take a look again. Maybe you're a little bit more bearish and you're saying to yourself, bullish. I'm thinking about bullishness. Let's say that you believe Facebook's going to go up after earnings. Then you would maybe look at selling the 370 put, the one that's right up here near the money. You don't think Facebook's dropping below 370, and you're gonna buy the 365. So what you're doing is you're selling the put. You're going to take in $9.20, but you're going to buy that 365. You're going to pay $6.95 for that, and you're doing that in case Facebook does drop. Your risk is going to be $5 minus the credit. Well, what's the credit? What's the credit, Tom? The credit is, check this out. Now you're making $225 and you're risking $275. So it's almost a 1-to-1. Facebook's out of the money. Maybe Facebook goes up the next couple days, you know, and if you had this trade on right now, you'd already see it going up in your favor. So it'd be that much more it would have to come back to hurt you. This is an idea too. This is, again, it's called a bullish put credit spread. You take the money in, but you do have risk, and that risk is the difference between strikes minus what you paid. All right. For those of you that are bearish, you would look at the exact opposite. Maybe you'd look at a bear call spread. And a bear call spread would involve, let me show you what a bear call spread looks like. So you'd be looking at calls. So we were looking at puts and using puts, and not just selling puts to be bullish, but selling puts and at the same time having an area of correction in case we're wrong. All right, so selling the 370s, but then buying the 365s for protection. Now, you could do that as a bearish trader by looking over here at the call side, and maybe you say, you know what? I think it's going to be below 375 after the earnings come out. So I want to sell the 375 calls, but just in case I'm wrong, I want to buy the 380s. So again, you see what's going on here. You've got about a $2 credit, but then you have a $3 risk. Again, your risk is always going to be the difference between strikes minus what you brought in. So if your difference between strikes is 5, you're going to take away, looks 923 minus 725. That's just roughly 2. So 5 minus 2 is 3. That's your risk. What if you did them both? Well, let's take a look at that. So if I actually put this together and merged it with my put spread, this is what it's going to look like. This is going to be what's referred to as an iron condor. An iron condor looks like this. You're hoping that the trade stays in between the areas of 365 and 375. More importantly, you're looking for it to stay in between really 360 and 380. All right, where your buy strikes are. There's where you would make money. All right, well, how much could you stand to make? First of all, here's the trade. The trade is you're buying the 365 puts and selling the 370 puts. That's bullish. That's the bull put spread. You're also selling the 375 calls and buying the 380 calls. That's the bear call spread. So you're bullish and you're bearish. You're bullarish on the trade. Now, this is tight. What you're looking for is you're looking for Facebook to kind of just stay right where it is. And if it does, you have the ability to take in $423 potential profit, and you're risking all of $77. That's an iron condor. That's an iron condor that has a 550% reward to risk ratio. So you might be looking at it and saying, you know, I'm willing to risk $77 to make a potential $423 if Facebook just sits still or wiggles a little bit and ends up right there. So I just showed you 3 ways of taking advantage of the earnings moves that can happen, not just with Facebook, but Apple, Amazon, Google. All right. Bullish spreads, if you believe the stock's going to be above where its current price is when we go through earnings. Bearish credit spreads, if you believe the price is going to be below the current stock price after earnings, if you think that sell the news is going to happen, or if you think it's going to be a lot of this and we end the week out pretty much where we started, then that is the opportunity or the strategy that I'm presenting to you. All right. Let's take a look at some final comments here. And so I'm so interested and I'm scared because I don't know how to trade. All right. Ramon, first of all, I want to welcome you to the channel. All right. Don't worry. You're in a lot of good company. There's a lot of people who don't know how to trade. Let me tell you this about people who don't know how to trade. Guess what they come to the channel with? No experience, but also no bad habits. And bad habits, if you want an idea of bad habits, take a look at some of the meme traders. And I'm not putting down the meme traders. I know they want to make money too. I just think that going about it in an emotional way with diamond hands and to the moon and forget about what it's called, what the risks are. I think that's the wrong way of looking at it. I think that if you take a look at this is BTC, and I've got the green on the screen. Let's take a look and see what's going on with Facebook right now. So Facebook's had a little bit of a pull off since noon. All right, AMZN. Amazon seems to be trying to get back up to its highs that it's had for the day. How about AAPL? Apple did pull back, but now it's kind of popping up a little bit. Google, BOOGL, Alphabet, just coming off those highs at 12 and 12.15. Looks like it wants to hit that again. By the way, if you ask me where the juiciest markets are, the juiciest steak, I'm about to buy one of these things called a Blazing Bull because I'm seeing this stuff. And I really love this Blazing Bull technology to sear your steak at 1600 degrees. It creates the juiciest steaks, nice and crispy on the outside, light little crisp on the outside, and like butter on the inside. If you want my idea of the juiciest options right now going into earnings, Amazon, Google, that's where the juice is. That's where the juice is for the options. And you're looking at this, and let me widen this out. You can see what's happened today. What's happening today is, it looks like Google, it looks like they all want to run up for the next couple days. I see a lot of different opportunities here. There's some day trading opportunities here for sure. They're, into Wednesday. There are potentially short-term option opportunities here is, looking at buying into options and getting out of the weeklies by Wednesday before the news hits, scalping. And then there are the selling opportunities that are going to come with some volatility, but they're designed to go through earnings and let all that volatility crash. Because, the one chart I didn't show everybody. Let me show you this. This is the one thing that gets me excited about earnings. And it is going in and looking at the best change after for earnings. What happens after earnings with options premium on these stocks? Well, here's what happens. Down, 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 down. All right, that's Facebook. Google, down, 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 down. Amazon, down, 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 down. Apple, down, 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 down. Doesn't mean the price is going down. It means those option premiums. It means that time premium that some of these people are buying up so high going into earnings, that's all going away. It's all going to get crushed. The IV crush is coming. And it's going to happen for a couple of these stocks on Thursday, and it's going to happen for all of them come Friday. All right. Price may change, but volatility is definitely going down after earnings. All right. And to finish up, Ramon, one of the best things you can do, and this is not really a plug for my channel, is get educated. This is a great place where you can get free education. Looking at what I do might be kind of like reading the Wall Street Journal for the first time, because I remember when I picked it up, I'm used to reading left to right and not these small paragraphs, and it looked very jumbled to me. But as I started reading it, started getting used to it, and the same goes for my channel. I'm not a guy that's going to sit out here and go and look at these things and go, hey, it's going up, buy it. Oh no, it's going down. Well, maybe I'll buy more later. I don't do that. All right, I'm not that guy. There's plenty of folks out there that you can go to. To me, it's a little bit more of a lazy way of trading. It involves emotion. What we do here is pattern-based trading, rules-based trading, and what I look for are things that have happened over and over and over again. And there's no guarantee it's going to be right going forward. But you know what? I like trading things that happen over and over and over again. And, because I just feel like the historical probabilities are on my side. And when I mix those with option trading, buying cheap options, selling expensive options, that's another way to really kind of put things in perspective. And speaking of cheap and expensive options, I want to share this with you guys. So, Ramon, one more thing. This is for you and anybody else that's out here that's brand new. Take a look at, I got an app out there on the Google Play Store and the Apple iPhone Store. It's called TG Suite, TG Suite. It's a free download. Now, not all of these buttons will work for you because most of them are premium buttons. But when you download these, regardless of whether you use our software or not, you can log in. If you have our software, use your logins. If you don't, go down to the bottom of the login. It says non-subscriber login. Log in there, fill out the information below, and then you have access to the morning report. And the morning report, let me show you what it looks like today. So I blew it up on the screen. And it shows me those options that are cheap and expensive going into the day. So what I'm seeing, which is interesting, is Lending Tree still out there. But look at TLT and TBT. That's interesting. The bond market is expensive. Well, it is compared to where it's been in the last year. And this is, again, the thing that's concerning me about the overall market is why are bond option traders bidding up bonds? That I don't know. Joe is the coffee industry. And coffee is expensive right now. When you look at the coffee index, look what the price of coffee. Look what's going on with Joe. Joe was $42 2 weeks ago. It's jumped up to 58, but look at the implied volatility. And with commodities, those of you that are experienced, you know that typically implied volatility goes up when stocks go down. With commodities, it's the exact opposite. As a commodity or an ETC or ETF, whatever you want to call this, goes up, guess what? IV goes up too because no one knows where that thing's going. Hey, if you don't think inflation's here, it is. Wait, because Starbucks will be raising these cup prices after what happened in the last week. If you see 5 days ago, Joe was at 46 and now it's at 58. That's a 20% increase in this. Expect a 20% increase in that Starbucks coffee to be coming to you very soon. All right. Let's see what we got here. So, and Constantine, who is a longtime Optionetics student, I know that name. I will never forget that name. It is seared into my brain. He says education in options is fundamental. Unfortunately, people consider that if they're good in their job, they'll be good in options. And that's where understanding and learning makes sense. Think about this. I went to, and I want to finish out here. So I went to JetBlue's Boeing 777 training facility in Orlando, Florida. I got to go to this thing. I got to sit in it, and I got to fly. My family and I got into their simulated in one of their simulators. These things are not cheap. So we're flying this thing, and we're flying over LaGuardia, and we're flying over Newark, and we're flying over different airports, takeoff, touchdown. It was really incredible. But what I learned coming out of that is that I can't just, if I want to be a pilot, I just can't go in, fly the simulator, get an introduction to flying and then go out and fly one of these things. You need hundreds, if not thousands and thousands of hours before you can become a licensed pilot. And guess what? Pilots don't get licensed immediately to the 777. They don't get licensed to the 777. They start out in the small planes and they work their way up and they graduate up to them as experience and hours that they've trained. Options trading to me is not that much different. You start small and you work your way up and you learn that way. That way, when you make mistakes, as you do in the simulator, all right, when I did the flight simulator, we laughed about it. It was good that it was in a simulator. But when you make mistakes in option trading, make them, because everybody does, make them with smaller denominations. Learn from them. And once you start to understand them and you get into a groove, you get into a strategy and a pattern that fits you, then you move to the higher dollar stocks, the higher dollar indexes, the higher dollar risks. That's what you move to. All right. So guys, as we finish out the session again, just a couple quick things I want to mention. Number one, thank you to all of you who join me here that are, especially if you're, those of you that keep coming back. I see the repeat offenders in here in the room every week. Thank you for supporting the channel. Guys, help me out. Show us some love. Hit that like button at the below in the description or just below the video. It helps support the channel. Also, if you're new, subscribing and dinging that bell next to it, you will be notified once a new video comes out. I've got some ideas for some videos that I want to share with you in the coming weeks. Definitely going to be talking about FANG. I'm going to show you what I did in FANG and kind of where I see them going, and we'll see whether or not they turn out to be winners or not. The probabilities are on my side. The patterns are on my side. But again, trading is one of those businesses where nothing is a guarantee. So want to thank all of you for joining me. Appreciate it. And we'll see you on the next video. Thanks again. Bye, everyone.